Good morning, good afternoon. Welcome to the June 12th WASDE webinar. My name is Greg Horstmeyer. I'm editor-in-chief at DTN, and I'll be moderating today. With us, as always, is our lead analyst, Rhett Montgomery. We'll go through the WASDE numbers and take a look at the crop production and other reports that USDA released this morning. As always, we're in a listening-only mode. You can ask questions by clicking on the chat balloon down in the lower right-hand corner of your screen. That will open up a chat window and you can put questions into there, and we'll ask those to Rhett at the end of the webinar. And with that, Rhett, I'll turn things over to you. Any surprises for June?
Thanks, Greg. And yeah, good afternoon, everybody. Thank you for joining us for our June edition of the WASDE webinar. So not a whole lot of surprises here today from the USDA. It was pretty much a run-of-the-mill report. It came out mostly as expected by traders and analysts. So I think, to be honest, I think the market will quickly move past this report, and perhaps already is, as we're seeing the reaction from the market. Just to quickly recap before we dive into the numbers, for now, post-report, we do have corn futures modestly higher, 2 1/4 cents on old crop and up about 3/4 cents on new crop. Beans are taking it the hardest. We're down about 9 cents on old crop soybeans, new crop soybeans down about 3 1/4. And then mixed on the wheat markets, Minneapolis wheat trading higher, while the winter wheat varieties trade lower, and that was what was going on before the release of the report. So seems to be shrugged off pretty much. The end of the month reports on June 30th and the stocks and acreage reports, I think, are going to be much bigger market drivers. But for now, we'll dive into these numbers fresh from the USDA this morning. Starting off with corn, USDA, again, kept it very minimal in their changes. Only one change across the U.S. corn balance sheets for June, and that was a 50 million bushel increase to the export number for the 2024-25 old crop season, bringing the export estimate up to 2.65 billion bushels. As a result, that decreased ending stocks from 1.415 billion bushels down now to 1.365 billion bushels of corn expected to be left over when at the end of the 24-25 season. Jumping over to the new crop balance sheet, 25-26, again, pretty much unchanged. The only change that flowed through was that reduction to the beginning stocks. Again, 1.365 billion bushels now of beginning stocks, which flowed through to a net 50 million bushel reduction in the forecast for ending stocks come 2026. The production estimates all left unchanged, still 95.3 million acres. That'll be revisited at the end of the month in the June 30th acreage report. Otherwise, the yield still 181 bushels per acre, unchanged as would be expected for the June WASDE. That would be a record production, as would 15.82 billion bushels of production that is currently still forecasted. So no surprises here, really. Most traders were expecting that increase to exports and expecting production to be left unchanged ahead of the important acreage report at the end of the month. Looking at the world side of things, starting first with old crop. Notably, the first thing I kind of jumped to when I opened the report this morning was Brazilian corn production. Traders were expecting potential for an increase there after the USDA increased that by 4 million metric tons in the May WASDE to 130 million metric tons. The average trade estimate was calling for 131 to 132 million metric tons, as most of the local agencies' reports continue to week in and week out really express just how optimal the growing conditions have been down the stretch, especially through pollination. There was also added acreage to what was initially thought as well due to the very good price for corn in Brazil. But we did not get that adjustment. As you can see, USDA left it unchanged for now at 130 million metric tons. It'll be interesting to see what CONAB and other agencies down there have to say. But for now, kind of a little bit of a bullish twist there, as most traders, as mentioned, were expecting an increase there to Brazilian production. As a result, looking over to the ending stocks, world ending stocks of corn did decrease slightly to 285 million metric tons. That is down just over 2 million metric tons from 287.29 in the May WASDE. Most of that decrease can be attributed to the U.S., as well as we did see a decrease in in China's ending stocks, down 1 million metric ton there, and that was as a result of less imports of corn from China. So looking at the stocks outside of China, saw a decrease there to 87.86 million metric tons. So seeing the supply of corn outside of China again decrease in this report from the USDA. Jumping to the new crop side of things from the USDA, again, kind of a bullish twist. They did reduce, again, partially due to the decrease from the U.S., and then that stocks change from China did flow through to their new crop balance sheet as well. So the net result was a little bit over a 2 million metric ton, about 2.6 million metric ton decrease to world ending stocks for the 25-26 season. Flowing down there, and we'll talk about this in more detail. It is a stocks build year over year from where we're at, from the 87 and change million metric tons up to 94 million metric tons outside of China. So we are expecting a stocks build next year, but as we'll talk about, it's still, in my mind, not outpacing the rise in demand we're seeing for corn throughout the world as well. And then looking down at the bottom, you can see China's estimate for corn production is pretty much unchanged at 205 million metric tons. They are expected to use about 5 million metric tons more corn in 2025-26 at 321 million metric tons. Looking at a graphical look of the stocks outside of the U.S. and China, always like to look at what does it look like in the world if you took away the world's two biggest stocks holders in the U.S. and China. And as you can see, the stocks to use is historically tight at under 35%, 34%. You have to go back quite a ways to about 1983, 1984 season to find a world stocks to use, not including the two, top producing countries. So basically what this tells me is, you're looking at, the other major producers and exporters of corn, whether it be Argentina or Brazil, that tells me that the production that we're seeing and the production increases we're seeing in those countries currently through the last several years is not keeping up with the rampant demand we're seeing for that corn. And a lot of that demand is from those countries. For example, Brazil is expected to use a lot more of their corn moving forward domestically. Their ethanol industry, for example, is just exploding in terms of using corn over sugarcane and other feedstocks. So that's going to keep the export picture fairly tight to where, Brazil is going to start having to look after their own interests, and any slip up in production there is going to be felt in the world. And it really leaves the U.S. in a good position to take advantage of that from an export standpoint here as we move forward. Jumping to exports, as you can see, it continues to be very impressive. Really no signs of slowing down in the current season. That red line has, started accelerating towards the end of 2024 and has just really kept up that pace. As of this morning's export sales report, which was as of June 5th, there are just over 2 billion bushels of corn shipped thus far through the season. That is 27% higher than a year ago at this time. Commitments should be notable. We're at 2.596 billion bushels. That was obviously leaving it only 4 million bushels away from the previous USDA estimate of 2.6 billion bushels. Of course, they raised that by 50 million bushels this morning. So now we are 54 million bushels away from that. So that being said, sales continue to impress. The suppressed value of U.S. corn has kept it, the cheapest offer in the world among its peers, even compared to Argentina and Brazil. As Brazil harvest gets underway, I do expect we will, due to the strong nature of that crop, see some increased competition through the summer. But that being said, we're still sitting very good from an export standpoint in terms of hitting that newly raised USDA goal of 2.65 billion bushels here for 2024-25. Another strong demand aspect to the U.S. corn market is ethanol production. a stellar week for ethanol production last week. 1.12 million barrels per day for the week ending June 6th was a new record by 1,000 barrels per day. That former record was hit in November of 2024. So that makes a series of records that have been hit this year, as you can see by the black line, has remained, steadily above its previous years, and really in the last 2 or 3 weeks has just really separated itself from what you normally would have expected in this going into the summer months, which were typically predictable in terms of ethanol production, as you start to see a sizable uptick in ethanol demand as driving demand ramps up into the summer months. That being said, we haven't seen that reflected directly into the corn market, frustratingly, as ethanol production, although it is up 3.7% from 2023-24's corn marketing year, the corn used for ethanol is only up about 0.5%, and that is through the most recent USDA report, which was for the month of April. So the reasons we may be seeing that gap could be a number of things. It's kind of hard to tell at this point, but could be a higher ethanol yield would be namely the one thing that jumps out. Most people use a 2.8 gallons per bushel of corn. That might be a bit of a stale number. I think you might be seeing some more, some 2.9s and some up to towards the 3 gallons per barrel, or gallons per bushel of corn crushed. So other than that, we are seeing a steady incline in sorghum usage, for example, some other feedstocks getting into the mix there, which might be eating into that a little bit too. So despite the ethanol being higher, we aren't seeing a one-for-one translation into corn demand, although the corn demand as a result, and as you'd expect, is very strong and expected to increase year over year by the USDA. Corn basis here has shown really steady improvement since the roll from the May to July futures. We rolled at about 32 cents under the July, and since then, I believe this is yesterday's chart, but I believe as of today we're actually to about 22 under. So it's rallied about a dime in basis over the last month to month and a half. Really a testament to what we just talked about with pretty much every category of corn demand being very strong here as we enter the summer. And it'll be interesting to see as we move forward. You can see we're keeping pace with last year's. Last year was kind of a transition year, which I think is why we're seeing it. Despite higher stocks last year and more available corn, we had a stronger basis. Well, I think that was really because we were coming out of those years from 2020 to 2023, where basis was extremely strong in those shortage years. You're always going to have a bit of a stickiness to the basis. It's obviously not just going to collapse in one go. So I think that's why you see last year's was a slightly higher, but overall still towards the upper end of what I would consider, your normal / surplus range, which include, your years from 2015 to 2020, where it's pretty predictable stream of corn in the countryside. And lastly, just wanted to throw this in here. Just a quick study I'd done a couple days ago, which I thought was pretty interesting. Obviously, every Monday, it seems like the USDA crop conditions report sets the tone for the week's trade in the corn market. But it is worth noting that you have to take those weekly corn conditions with a bit of a grain of salt. There is, as you can see, just looking since 2014, very little correlation between a good to excellent rating in June and what the final yield ended up being. In fact, you can see a year like 2023 jumps out fairly, low good to excellent ratings in the 55 to 60% range, about 57 or so. Yet we yielded 177.3 bushel per acre average for the U.S. That compares to 2019, which would have been, as you thought would happen, a low good to excellent was about a 10 bushel per acre lower yield that year. So this is just kind of a word of warning. There's a lot of growing that happens between June and harvest, obviously, and a lot more that goes into making the yield, as you all know, than a visual appraisal of the field in June. So just thought I would kind of put this in here, just given that it is on the top of people's minds. It's in almost everything you read about the markets week to week right now. It's just how good the conditions are, but not necessarily the end all be all of making a corn yield at the end of the day. Jumping to soybeans, USDA made it very easy for us here for soybeans. They gave us no changes across either the old crop or new crop balance sheet. This was as expected. You could have made the argument that perhaps they needed to touch up exports and maybe even crush, but given the current pace of use compared to what the USDA's estimated it, I wasn't surprised to see them just kick this can down the road and leave the ending stocks for the 24-25 season alone at 350 million bushels. That, of course, flows through to the same estimate for 25-26 of 295 million bushels for ending stocks next season. Of course, the production all left unchanged. The USDA will revisit that in July once they have a fresh acreage number based on their findings for the June 30th report. Looking at the world side again, starting with the old crop, USDA kind of uses the June report to fine-tune its findings for South American production. Most traders were expecting that there was a chance to see a slight uptick in Brazilian production, and opinions were really split on Argentina. Argentina is struggling with some flooding issues in the Buenos Aires province in particular that are thought to maybe be taking the top end off of yields there. But for now, the USDA left that unchanged and also left Brazil unchanged. So overall, that was, more or less as expected. Like I said, they were maybe expecting a touch higher on Brazil, but I think, the 169 still a record production for Brazil, probably a fair estimate at this point. As a result, we did see just a slight increase in the stocks of corn, including China, up to 124.2 million metric tons. That is, as mentioned, as a result of higher Chinese stocks. They cut the crush usage for China by 1 million metric ton, which as a result increased world stocks. It is notable to say that 79.2 million metric tons outside of China is unchanged from May. So basically seeing no other changes to the world balance sheet for now, other than that change to Chinese stocks. Looking at the new crop season for soybeans, a slight increase again in ending stocks on the new crop side of things. Again, that's pretty much to do with China. That stocks increase for 24-25 flows right into their beginning stocks, and as a result, increased their ending stocks for the new season, the estimate there by 1 million metric tons. Otherwise, no real changes to note. They left South American production unchanged month over month. Of course, the Brazilian estimate will garner some attention as, furthering the record from that we set this year. But until we get till, October, November, when that crop's being planted, again, have to take these early estimates with a bit of a grain of salt. Not, still a fairly high degree of error, and anything can happen here moving forward. So more just a guiding point at this point, but we did see a slight increase there in world supplies expected for 25-26 on the soybean side of things. Jumping into the U.S. balance sheet, the individual categories here, soybean exports maintaining a year-over-year lead here. As of June 5th, exports just under 1.7 billion bushels. We are up 12% from a year ago. Commitments as of last Thursday are 1.79 billion bushels. So we are within 60 million bushels now of the USDA goal in terms of sales. As you can see, we have fallen below the 4-year average as we've progressed through the marketing year, but we are maintaining, we're not losing ground. We're maintaining a steady 12 or so percent increase over the shaded area, which is last year. So if you can kind of imagine that red line extending to the end of the green shaded area, it sure appears that we're right on target to hit that USDA goal of 1.85 billion bushels. I will say some of my other models are slightly higher yet, 8.6, 8.65. But so we might still see some touch up there down the road. But I think for now, fair that the USDA left that unchanged, just given the uncertainty that comes with the late crop years, especially with such a big crop out of Brazil and a lot of competition for beans. Looking at the crush market, despite really weak biofuel usage, USDA notably did decrease biofuel usage in soybean oil's balance sheet again this morning while increasing exports. So they left the stocks unchanged. But despite that weak pull from the biofuel industry, we are continuing to see very impressive record-setting crush. Crush at this point up 5.8% from a year ago. The USDA, of course, did leave their estimate unchanged at 2.42 billion bushels. The dotted lines on that chart are just a couple of different models I've ran, a couple different possibilities. I will say currently, just given what we've seen, the top one with the smaller dots is the one I'm kind of erring towards currently. And that would be, if I remember correctly, would be about a 2.44 billion bushels if that comes true. So still the potential in my mind to perhaps outperform what the USDA is estimating. But for now, as mentioned, probably fair given the uncertainty in the biofuel industry with the political uncertainty, especially that the USDA left that unchanged for now. But still a record either way, and very impressive crush through the marketing year thus far. Looking at soybean basis, we were doing really well up until just the last couple days. We've seen a dip in the national soybean basis. We were running right around 47 or so cents under. This morning when I opened this chart to put it in here, we dropped to 51 cents under. It'll be interesting to see if this is just kind of a blip. Sometimes we do have fluctuations in the data that cause some short-term kind of weirdness in our charts. But our basis analyst, Merritt Kennedy, did send me a note this morning that said that some of the processors she tracks are rolling their bids currently out to the November board way ahead of schedule. And with that, they are weakening their bids. So perhaps we're seeing these crushers get caught up on inventory to get them through the season. But otherwise, as mentioned on the previous slide, still a lot of incentive to own beans and crush beans. So we'll see how this shapes out down the summer. But for now, anyway, we are, what I'd call right in the middle of the 10-year range. We are about 7 cents firmer than last year on soybean basis. Lastly, just a quick look into the soybeans speculative position. This is as of last Tuesday. We'll get the updated one this Friday, tomorrow. But just under 60,000 bushels of soybean length. Since last Tuesday, we've seen the price go up and back down. So it's probably fair to assume it's close to this, maybe a slight liquidation of this length seen. But for now, we are seeing, the most bullish bet for soybean price that speculators have held since about November of 2023 or so. The rest of June will tell us a lot, between the acreage report and the stocks report, and of course the weather throughout the Midwest is going to do a lot to encourage or discourage this length in the eyes of speculators. So definitely something to keep an eye on. Again, with a lot of growing season remaining and a lot of reliance currently on a record yield to keep stocks at a healthy level. It's not surprising to see speculators want to hold on to maybe a very modest net long position, just bracing for any potential weather issues that could come up later in the summer. Another look here, just to quickly compare Brazil values to U.S. values. This is perhaps a optimistic chart. As you can see, despite a record production in Brazil and record May imports from China, which are obviously expected to be coming mostly from Brazil, U.S. soybeans offers out of the Gulf are very competitive currently, day in and day out, to what you're seeing in Brazil. Obviously, it's probably a factor of Brazil beans got so cheap into the early months of 2025 and have been rebounding ever since, as demand just continues to be very, very strong in Brazil, both domestically and for their export beans. Meanwhile, you're seeing Brazil or U.S. beans have kind of hit a wall in that 1150 area, drifted down and have been slowly but surely climbing. But if Brazil continues on that trajectory, excuse me, it's natural that you're probably going to see an upwards pull in U.S. beans as well. But just something to keep an eye on here moving forward, that it does seem like the U.S. is gaining some business, even though China is notably absent. Still in good position to gain a lot of world business just with how competitive our offers are. Jumping to wheat here, again, not much changes to speak of. I was interested to see the USDA left their export estimate for the old crop season of 820 million bushels unchanged. We'll talk about that more momentarily, but that flowed through to an unchanged ending stocks for the old crop season. The only change we saw on the new crop production stayed the same. The only change was an increase to next season's exports, 25 million bushel increase, which reduced ending stocks by the same 25 million bushels for 25-26, which we'll talk about in further detail, the export demand we're seeing. Looking at the world side of things for the new crop balance sheet, a little bit of a surprise here, although it was within estimates or expectations, excuse me, but we did see just about a 3 million metric ton decline in world wheat stocks as well as wheat stocks outside of China. A lot of this has to do with Russia. Russia had increased feed usage was really the driver and the theme of today's report, more feed usage for 24-25, and also more feed usage projected for 25-26, which dropped Russian stocks for next year down 2 million metric tons. So we'll be interested to see, obviously, how that flows in with their production. Left alone at 83 million metric tons. That crop is looking to be much improved over what was initially thought early in 2025. Looking at U.S. Wheat sales for the new season, as mentioned, the USDA raised their export by 25 million metric tons to 825 for the 25-26 season. Those sales and shipments or commitments are running 20% ahead of the 5-year average. So really impressive pace. Weaker U.S. dollar, as well as just overall weaker U.S. wheat prices have really helped an uptick in the competitiveness, excuse me, on the world stage for U.S. wheat. Otherwise, it was interesting to see that despite this morning's exports as of the end of May, which was the end of the 2024-2025 wheat marketing year, the USDA said total accumulated exports only totaled 776 million bushels as of May 31. That was well below what the USDA is still using for their total year export forecast of 820 million bushels. This tells me that the USDA is expecting there to be some late season accounting, which will bring that ultimately up to their goal, I guess. I was expecting I could still see it north of the 800 million bushels for sure. The Census Bureau has been running steadily ahead of the USDA. 820 might be a bit of a stretch, but obviously the USDA is seeing something here that's keeping them optimistic that that goal will eventually be met. Looking closer into the winter wheat production, so overall, are expecting higher winter wheat production at 1.382 billion bushels, up about 33 million bushels from last year. And we are expecting to see, looking down the different categories, increases in every category. For hard red winter, the largest crop since 2019 as estimated. We are just marginally up on soft red. And then for white wheat, it's the largest crop as estimated in a long time. I have to go back to 2011 to find a crop bigger at 254 million bushels. Just quickly a look at the map here, just to compare some of the key states. Obviously, Kansas jumps out right away, 352 million bushels of wheat production, a very impressive increase from last year's 307.5, as the recent rain and ideal drought breaking conditions basically are expected to have an impressive turnaround through the Midwest, with the exception of the Northern Plains. Nebraska still expected to struggle compared to last year due to some of their drought issues. And then Oklahoma expected to have slightly less crop, but pretty much on par with what was last year's amount. And then still expecting strong crops out of Washington and Montana in terms of winter wheat. Looking at hard red winter wheat basis, still a fairly weak basis, about 60 cents under the July board, the third weakest in the past 10 years. We have seen that basis improve here through the late spring and early summer as stocks and availability in the countryside dwindles. But it will be interesting to see if this winter wheat crop is as strong as currently estimated. Probably going to see some pressure come into that basis here in the coming weeks and months as that harvest gets underway. Looking at the wheat speculative position, this is something that's been on a lot of traders and analysts' minds. Just a couple weeks ago, we did set a new record for a combined net short. So this is looking at the Chicago, Kansas City, and Minneapolis contracts combined for futures. We were at 207,000 net contracts short. They have covered some of that short through the turmoil in the Black Sea. Poor conditions for the spring wheat crop were a big part of that. The lines there are basically what it is it's a 50-week, it's a 5-year moving average is the middle red line, and then those are just standard deviations. The black line that it's right now is 2 standard deviations below that average. So looking back historically, it does seem to follow what we'd call a normal distribution, meaning that values waver between 1 and 2 standard deviations and have a tendency to revert back towards their mean. So if it follows, that mathematical concept, you would expect here before too long to see some sort of covering to draw that back closer, perhaps to that 1 standard deviation, which would be about 100,000 contracts net short. But of course, there's more that goes into it than just math. It's just an observation I made. But the real takeaway here is that should something change in the wheat market that gets these traders' attention, and they are no longer comfortable with this exposure of being this short, 170,000 contracts is a lot of fuel to drive a price rally. It's kind of the same thing we saw when corn futures were 400,000 contracts net long. And how drastic the sell-off was through February and March when traders decided they were no longer comfortable with that length. So kind of the opposite type of situation here, and definitely something to keep in the back of your mind as we progress into harvest, and then also into the spring wheat season as well, as there's still some dryness concerns in a lot of part of the world. So just one aspect here to keep an eye on. Just to wrap things up quickly, corn, my takeaway was that it was slightly bullish today. Old and new crop ending stocks were both reduced by 50 million bushels. World old and new stocks outside of China were lower as well. Soybeans, although the futures price would disagree with me, I did call this neutral. The U.S. balance sheet was unchanged. We did have slightly higher world stocks, but again, a lot of that was coming from China. With minimal changes to the world outside of China. And then lastly on wheat, again, calling it slightly bullish. Lower U.S. and world stocks expected for the 2025-26 season. But that being said, we're still expecting strong U.S. and world crops. World production is expected to be up about 1% from 2024. But as mentioned, there has been a lot of adverse weather, especially in the northern China. The Black Sea area has had its issues. And there's emerging drought concerns in the Canadian prairies as well to keep an eye on here as we move through the summer of 2025. That being said, our next USDA reports are on June 30th, the acreage and stocks reports. As I mentioned at the top, I think those are going to be really intriguing reports that are going to really dictate price direction through the summer, especially how we see the corn and soybean acreage potentially shift as a result of the growing or planting season conditions thus far. So with that, we'll open it to questions. Again, thank you so much for joining, and I'll pass it back to you, Greg.
plants have for some time been progressively getting more efficient, getting more ethanol out of the processing. Do you expect USDA to change the numbers on that, or has the market pretty much baked that in? Is it an issue that's affecting the way the market looks at ethanol production?
Yeah, I think, year in and year out, ethanol is kind of the most predictable part of the U.S. Corn balance sheet. Due to the blending mandates set out by the renewable fuel standards, we're pretty much stuck at, what they call the quote unquote blend wall, which is 10% to 15% of U.S. gasoline is mixed with ethanol on average. Obviously, you have your E85s and your summer-wide E15 allowances that can kind of skew that one way or the other. But I think, that 5.5 billion bushel kind of seems to be the wall. It will fluctuate, obviously, either side of that. But yeah, for this year, I think in any other year, we probably would have seen a higher mix of corn crush, but I can't remember the exact stat, but grain sorghum, for example, usage in ethanol production this year is like 250% higher than it was last year or something. It's really been impressive. And of course, that's still a very, very small chunk of it. U.S. corn still is, 95+%. But yeah, overall, it's just, I think the reason we're seeing, as mentioned, that lag between actual ethanol production and corn usage for ethanol is probably a yield factor. I think officially the USDA still uses 2.8, but as mentioned, I think that might be starting to be a little bit of a stale number. I think we're seeing more and more efficiency out of these plants, as you mentioned.
The other question I have was over the soybean world. You mentioned that soybeans in the U.S. are still pretty cheap relative to South America and otherwhere. What's your prediction on when that line begins to cross?
Yeah, so it's kind of been it's hard to say, I guess. Obviously, the closer we can get to U.S. harvest, the better, because obviously in October when U.S. beans are coming off, and we're a couple months removed from the Brazilian harvest, then usually the U.S. takes command of that market, and that's when you see the business shift from China, whatever they need to get by from October to March or April. You start to see that business shift towards the U.S. So that being said, it does seem like we're seeing China do a lot more of their buying early. As mentioned, they set a May record for or a record in May, I should say, for imports of soybeans. I think it was around 14 million metric tons or so. The majority of those obviously coming from Brazil. So the good news is that at least the U.S. and China are talking to each other at this point. I think despite the market's reaction yesterday or lack thereof, I think that trade summit in London should be taken mostly as a positive, that at least the two sides are in conversation. So down the road, I think that opens the door for perhaps some potential for deals to be made on the soybean side of things. But yeah, I think it's also just a testament to again, how many soybeans there were in Brazil that obviously just plummeted that price through late 2024. And then other demand sources, Brazil has a crush industry to keep afloat too. So I think that's where you're seeing them. They're able, even in their harvest period, to keep a floor under their soybean export offers, because it's basically like, well, come and get them, or we'll just start to crush them domestically, which is, I think, the direction we're going there too, which is going to continue, in my mind, to squeeze world soybean balance sheets here moving forward. We're gonna, Brazil's gonna add acreage and acres and acres, and but in my mind, the world soybean market really needs that, because we're getting to the point where the U.S. is getting closer and closer, in my mind, to being more and more independent in terms of the export market, because we're using so many of our beans now domestically. So.
Thank you. Well, with that, I'll thank everybody for attending and thank Rhett for his insights. If you have further questions, Rhett's information is up there on the screen right now. You can send him an email or visit our websites. As Rhett said, I want to remind the next markets webinar will be June 30th. That'll be the grain stocks webinar. We also have another webinar coming up on June the 24th. It has a livestock focus. It's part of our Ag Summit series. It's called The Future of the Cow Herd. We'll focus on cattle and livestock issues. We'll have livestock analyst Shaylee Stewart and Dr. Darrell Peel from Oklahoma State. We'll be talking about the herd and what's happening with herd expansion. We'll talk a little bit about summer hay and forage outlook from livestock editor Jennifer Carrico. And then we'll have a summer weather outlook from our ag meteorologist, John Baranek. So look forward to folks participating in that. You can sign up for that webinar as well as for the June grain stocks webinar at dtn.com, just like you did for this webinar. Remind everybody this has been recorded and we will have a rebroadcast available on the dtn.com website. That should be up in about 2 business days, so probably early next week. If you want to revisit this or share it with others in your operation, you can do that. And again, thanks everybody. Have a great rest of your market week.